Jay Jacobs is the head of the U.S. equity ETFs at BlackRock. So we are honored to have you. BlackRock is playing a major part in Invest Fest this year, coming back. Workshops, we're going to talk about a few, but first and foremost, thank you for joining us. Appreciate it.
Yeah, pleasure.
Yeah, so let's talk about the ETF market. We talk about ETFs a lot on this show, on this platform since we started. So my first question is, with trends like AI and Bitcoin, and the shifting geopolitical landscape, how are the markets being restructured in 2025 and even looking forward to 2026?
Well, I think one of the important things for investors to look at in this year is just how much the market is being moved by themes. You go back to February, you had a huge sell-off because of DeepSeek, which was really a bigger function of artificial intelligence. And the market's trying to understand how valuable is AI and what the value of AI means to the stock market. Now, zoom ahead to April, you had Liberation Day. This was really about the theme of tariffs and geopolitical fragmentation. If you go back to basically the end of World War II through the global financial crisis, all you saw was more and more and more globalization around the world. People moving around the world, goods moving around the world, the internet and finance connecting money and content around the world. And you're starting to see that shift a little bit, more regionalization, more internal production of things through reshoring. So in April, you had this big kind of reinvigoration of geopolitics as a theme. We're increasingly seeing crypto as a theme as people look at changing regulations in the US and changing ways to build portfolios using crypto. So I think the big change for 2025 is a lot of people used to look at the world through sectors, through countries. Increasingly, people have to look at the world through themes to explain what's going on in the markets and try to capture some of the best opportunities.
Yeah, we grew up in an era where people invested in individual equities. That has changed in the recent events over the past, I'd say 3 to 5 years. What have you noticed in terms of ETF purchasing from individual investors?
Huge growth. So, you're absolutely right. If you went back, this isn't that long ago. If you went back like 2 or 3 decades and you wanted to get global exposure, you would pick a stock like, I don't know, like Coca-Cola or something, just because it's a company that sells product all around the world, right? But you have so much concentration risk if you do that. You're buying one company in one segment. If soda sales go down, that's going to be bad for your portfolio, even if you're trying to get kind of global exposure. But what ETFs did was they made it so easy with just one click through a brokerage account to literally get exposure to thousands of companies around the world in all kinds of countries in Europe and Asia and emerging markets. And so that growth has just continued with end investors who are looking to build, frankly, what would have been considered really sophisticated portfolios just a couple of decades ago, but now are just fairly kind of simple multi-ticker portfolios where you can get your US exposure through the S&P 500, your international exposure through a ticker like IXUS, emerging markets exposure, Bitcoin, et cetera. You can really build a super diversified portfolio using ETFs because of the ease of access that they provide investors.
I think we all know AI is here to stay. Crypto is here to stay. Going back to your thematic point, what themes do you think we'll see maybe the next 5 years or into the 2030s that will have an incredible impact on the market that investors tonight should be looking out for?
So I think it's easy to get lost in the day-to-day of all this noise and news around what's going on. If you look, longer term, we just continue to have tremendous conviction around artificial intelligence. So what we say right now is we're really in stage 1 of 3 stages of artificial intelligence. First stage being the build out. You have to build all of this infrastructure around AI to support it. These are data centers. This is power supply. This is semiconductors. This is trillions of dollars being invested to build out this artificial intelligence revolution. It takes years. This isn't just something that happens in the cloud mysteriously. It has physical places where artificial intelligence is happening. So that's where we are today. The next stage will be enterprise adoption. This is when companies and governments around the world are embedding AI into how people work at these companies, the types of products they're building at these companies. That takes time as well. It's not like email just took over the world in one day. It took a few years for people to realize that this is a technology that's useful and you start using it in your everyday life. So that's the second stage. And then the third stage will ultimately be what we call the transformation stage, where AI is basically ubiquitous. It's in everything we do. It's in driverless cars. It's building entire companies, maybe with one person, where it's AI building the products, doing the legal work, doing the finance work, et cetera. All of that is going to take maybe a decade to play out. And so if we look 5 years, 10 years out, we still see a lot of opportunity in artificial intelligence as really one of the biggest tech revolutions we have seen since the invention of the internet.
So, okay, you're the head of equity when it comes to ETF. So this might not be in your wheelhouse because it's crypto, but you talk about iShares, we got to talk about IBIT, right? I believe it's the largest Bitcoin ETF and something that has been a star performer as Bitcoin is going up. So what is your thoughts on IBIT and the criticism that people might have of it as far as that it's not actually owning crypto, and the crypto purists look at it a different way? So how do you feel about IBIT?
Well, let me just kind of dispel a myth. What IBIT does is it buys Bitcoin and it uses institutional grade storage to custody it for people. And if you just think about how simple of a concept that is, and yet it solves so many challenges for investors. Let's walk through some of those challenges. So one, a lot of investors who want to get exposure to Bitcoin would have to create an account with the digital asset exchange. Now, many people have done that, and that's fine, but a lot of people maybe don't want so many financial accounts out there, right? Their bank information, their personal information, maybe they only want a couple of accounts. So they haven't gone so far as to open an account with the digital asset exchange. And if that was the case, they really had very few ways to get access to Bitcoin. So now with IBIT, if they have a just traditional brokerage account, now they can get exposure to Bitcoin through IBIT. The second thing is, even if you owned an account with the digital asset exchange and you're trying to buy Bitcoin, it can be very expensive to do so. Just the trading in and out can often be 50, 60 basis points each way for individual investors. It's kind of like going to the airport and trying to get like foreign currency. It's pretty expensive, and how it's charged is not very clear to investors. The third thing is, if you open the account, you trade it and you bought Bitcoin, and you just keep it in a hot wallet online, you still have this cybersecurity risk that someone could steal your account, get into your wallet, steal your Bitcoin, and it's gone forever. So really one of the big innovations of IBIT is that it's leveraging really institutional grade custody, which is not holding Bitcoin connected to the internet that can be hacked, but taking it offline and storing it in cold storage. That's a huge benefit to investors who really want kind of the highest grade custody solutions for Bitcoin. You've seen these stories of people storing Bitcoin on a hard drive and accidentally throwing it out, and there's now millions of dollars on that hard drive. I personally, I've been interested in Bitcoin for a while. I bought a hardware wallet for Bitcoin, and it was right around the time I was having my first child. So I had all these boxes showing up to my house, and I literally just lost that hardware wallet for a couple months. It was okay. I didn't have much on it, but it just shows like even in your own house, you can lose this stuff and you lose all the value. So IBIT is solving a lot of challenges for a lot of investors. I would say the final point is that a lot of investors just want to see Bitcoin in the context of their whole portfolio. They don't want to see it over here on some other account where it's going up and down each day. One of the benefits of Bitcoin is that it's super diversified compared to something like stocks or bonds. So being able to see the ETFs, that own stocks, your bonds, your Bitcoin all together in one portfolio is really valuable to investors as well. So that is why IBIT has been so successful, raising over $80 billion in about a year and a half. It's because of all those solutions it's providing investors.
The ETF market is, it's a competitive market. There's plenty of firms that offer them. Specifically iShares, what differentiates you guys from all the other ETF providers?
I think it's three things: quality, breadth, and value. So quality, we have more ETFs around the world than anyone, over 1,300 globally. We have invested so much in building the greatest and best ETFs we possibly can through what we build within BlackRock, through the partners we choose to work with, through how our ETFs trade on the market. We are obsessive over quality, and that shows in the products that we've built. I think going back to IBIT, a lot of people just trust. There's a lot of trust that we're going to manage their Bitcoin in the way that they want. The second is in breadth. So in the United States alone, we have over 450 ETFs. So if you're looking for dividend stocks, if you're looking for AI companies, if you're looking for Bitcoin, if you're looking for bonds, we have everything. We have virtually everything through those 450 ETFs, really giving people a ton of choice to build the portfolio that they want to build for themselves. And then third, I talked about value. We really like to leverage the scale that we have at BlackRock because we have so many funds, because we manage, trillions of dollars in assets. We can offer ETFs at very low fee points. So, you're getting good value when you buy an iShares ETF as well. So we have the quality, we have a ton of choice, and we offer that at a great price for investors.